Hello and welcome to a brand new episode of ET Markets PMS Talk, a show where we discuss about the opportunities as well as challenges faced by the fund managers in the popular space of ultra HNI investing. Well, my name is Kshitiz Mahajan, and today we have with us a very special guest, Kshitiz Mahajan, who is the CEO, Complete Circle Wealth. Welcome to the show, Kshitiz.
Thank you, Kshitiz.
Thank you. Thank you for being part of the show. Well, SEBI is one of the in one of the regulations said that AIF provides the option of direct plans to investors. Now, what do you make of the direction, and do you think that this will actually put the PMS industry in the spotlight?
So, always a pleasure to be with you on all these shows, Kshitiz, and thanks for the opportunity. I think regulator with this news is making it very clear they want a level playing field across various investment vehicles, whether it's mutual fund. Last year we have seen, 3 years back we have seen PMS direct plans coming, and now AIF direct plans coming. And at the same time, there's one more development from 1st of May onwards. Upfront payouts in category 3 AIFs are gone, and in category 2 and 1/3 will be paid as upfront. So I think what regulator want is more transparency. They want level playing field across investment vehicles. At the same time, they want product to be sold to investors on its credential basis, not on the basis of any incentivization to channel partners. Having said that, it's a very evolved market as I speak in India. We have seen good practices across various wealth management houses. At the same time, yes, PMS will and should gain from this practice. Look, the key difference between PMS and AIF. One is PMS, there's a ticket size which is small. In AIF, we require 1 CR, PMS is 50 lakh. There's no hard locking in PMS. Many of us, like in our PMS, Complete Circle Digital Commando, we don't have an exit load. Then not only check, transparency is much more. You can take the stocks also as a part of PMS holdings. Then there is no entry load. There are different models that it can be customized. It's an individual holding. So, and you can see the way product is performing on a daily basis, although we don't suggest anyone to do that. But I'm saying it's not like AIF where you have a monthly NAV coming. There is nothing against AIF. All I'm saying is PMS from this news, because it's a level playing field now, will gain vis-a-vis AIF. So yes, good for investors, good for PMS as offering.
Right. So more transparency definitely is,
yes.
Is something what regulator also wants, and it's good for investors as well across AIF as well as PMS. Now we'll also talk about your PMS scheme, which is digital compounders. So what is the investment? Basically, first we'll start off. How was your journey and how it has been for the digital compounders? You have one PMS scheme.
So we'll be completing our year on 9th of May, and must say, incredible journey. A lot of support from existing as well as new clients. Thanks to shows like yours, where we are able to talk about what we are doing. And I must say that not only that we have got allocation from existing set of client and new client, but we have started getting top-ups also and reference also. So it's too early to talk about the return part because we have not completed a year. But yeah, returns are more or less in line with the benchmark index, which has also now changed as per the new regulation. We have to take a return index of BSE 500 as a benchmark. So that will also change from 1st of May. So I think what the way we have thought of, we were not in a hurry to deploy money. We staggered the investment. Whomsoever has given us money, we have taken at least 8 to 10 weeks at least to deploy the money. In some cases where markets were falling, we have taken a little more time. So I think it's a learning process, and it's a great journey so far.
Absolutely. And let us also know, for the digital compounders category, what is your investment philosophy? I mean, how do you pick the winners for the portfolio?
So the key philosophy, as we are in India, is India only. For us, it's I.N.D.I.A, and I is obviously investment ideas which are participating in Indian growth story and working on the technical prowess. There's N is robust numbers, but we are looking at in all businesses, which is like good ROA, earning growth number, ROCE, low debt, fixed, or let's say low leverage on the company balance sheet, or no leverage on the company balance sheet, and profitability growing with the margin of safety and expanding its bracket. So those are the numbers. And then these are digital transformation of India, which everyone in the world is looking at. We are looking at businesses which are actually transforming their back end, front end, or aligning themselves with the help of technology, or let's say they are moving towards spending lion's share of their future spend on digital India. So that's what they're looking at. Then is obviously your inexorable integrity. That's what they are looking at, because end of the day it's a management part which is the most important part that's run the show. And if the management is good and business is able to generate in excess of 15% ROE and earning growth number, and there's economic board to it, then you are very well bound to make some money out of it in terms of returns. And A is your acute risk management. That's what we look at, irrespective of whatever plus minus you keep on doing, whatever analysis you keep on doing, whatever research you keep on doing. You have to keep in mind that in this as a portfolio manager, company, you should be very well versed of the risk attached. So you should be very well holding stocks, or maybe aligning your portfolio in line with what is available, and the least risk you are able to generate some alpha for clients. That's what we look at as an investment philosophy. So our investment philosophy is I.N.D.I.A only, India.
No, absolutely. In fact, a clear thought process there, Kshitiz, and I would say that I'm sure our viewers would also take note of that whenever you're picking stocks. I think the investment philosophy has to be clearly or etched in stone, or you can say that it should be clearly defined. Then only it helps in decision making. Also, try and also sort of highlight what exactly are digital compounders.
So digital compounders are businesses which are ahead of the curve in adopting technology as one of the key parameters of transformation, or let's say of their future empire, or building their future businesses. Okay. So, it's a very used to be a very common saying that IT, or let's say digital or technology as a chapter or department in a company is a vertical. Now it's horizontal. It's across various departments, that you can't, come what may, technology has to be a part of it, because it is something which is not only helping you to scale up or fast your processes, but at the same time it is helping you to innovate also. So digital companies are those companies which are spending a lion's share on innovation, which are ahead of the curve from other businesses, where we can see that they are trying to build economic moat, which is to our knowledge or to our research capabilities cannot be beaten or cannot be competed in next 4 to 5 years. That's what we are looking at. Okay. Although these are long-term, ideas, but the cycles have turned so short nowadays in equity markets. True. That at the same time you have to keep watching all these businesses. You just can't sleep over it. It used to be the same when I started my career, let's say 7-8 years back, that research it, buy it, and sleep over it. But nowadays that doesn't hold true. We have to keep an eye how things are shaping up, how things are going to move ahead. And if it's not one against another, if you have something better vis-a-vis what you're holding now, it's always good to move there. Absolutely.
In fact, now that you're with me and we are talking about PMS, so which sectors are you finding value at this point in time, or if you can take the theme FY24 as well, in that.
So I can talk about what we are doing at our end. We have almost 29-30% on the BFSI, which is financial sector side, then almost 18.5, 19% on the IT side. Again, people mistook it that this might be a IT PMS. No, this is not a IT PMS. As I said, we are horizontally available across sectors. Those companies we are buying in, and consumer discretionary materials are the top holding. Then pharma is there. So idea is not to look at that we should buy companies in these sectors, but as we shortlist, depending on all the various investment philosophy process, we have a bucket of almost 72 stocks, which are a part of our overall investment universe. So one is investment universe, then you carve out a portfolio. Out of those 71, 72 stocks, we carve out a portfolio of 28 to 30 stocks, depending on at what time the client is coming. So let's say if both of us are having the same complete circle digital compounder PMS, and you have joined in, I'm coming in September, there is an overlap of 60-70% of the portfolio, maybe 75%, but There might be that some stocks in which you have little higher allocation, I will have little less allocation, or maybe there'll be a difference of stock. So I'm saying, because as I said, these are dynamic markets and you have to manage portfolio dynamically. So we see that there's a lot of stock building, scope building up in this investment scenario. And at the same time, we are right now very well poised to take on the opportunity on what is available at a discount what the fair value is. So maybe the markets are at 70,000 close to about Nifty levels, but there are many businesses that are still trading at 15,000 or 14,000 levels. So we keep on eyeing on these businesses, and we see that if our economy has to grow, let's say nominal GDP of 11 to 12%, the overall banking system will grow at 14-15%. And many of the key holdings, I see that is due for performance, and they're posting good numbers. We are having the result season going. Yesterday it was many will come now today and tomorrow, and many will flow next week. So we are keeping a close eye, and we are keeping a close watch on what we are buying right now. But yes, these are the top sectors which we see will do and should do well. We might step up in industrials in this year, because we see that manufacturing, which is contributing 16% to overall GDP, will step up to 20-25% next 5 to 6 years time. But this discussions are on the way. So let's see how things
go. So the BFI remains to be the the lion's share. That particular sector will take the lion's share in the portfolio. Right. Not a problem. In the meantime, we would also want to understand what is stock transfer in PMS and how it works.
Okay, so this is really interesting, and this is I've been very honest in accepting that almost 37-38% of our corpus which we have garnered by so now has come through stock transfer. So interestingly, if you see how the holding pattern is there in Indian business, or let's say listed company, we are very close with businesses by promoters, 53-54% promoters. In good times, now FIs have been selling for last almost 1.5 years, but let's say 20% plus is FIs, then 11-12% is almost your DIs. So close to 12-13% is your retail participation, which is there. So this retail participation, DI has been mutual fund, insurance, and other things. Retail participation is you, me, people around.
Absolutely.
By the way, I'm not buying any stocks from the day we have got a license. I have the existing portfolio, which is there. So all these stocks which retail participation is having, most of them are having stocks which are actually not very high quality stocks. And because when I was an investor and I was not reading that much, even I realized that I used to buy stocks which used to be talk of the town, irrespective of not looking at the result seasons. So you see that companies like Yes Bank, Vodafone, they have stock shareholder in excess of 30 lakh rupees. So people think that the price is less, maybe it will run fast. That's not how it works. So we review portfolios of a client, and we tell them that this is your portfolio, this is how it has performed, this is how it has done, and this is our portfolio. We are expecting the earnings to grow at, let's say, 15-16% or 18% with expanding profitability margin. And we see these companies are having economic mode. So rather than you managing the portfolio, why don't you transfer these stocks to us? So when you take investment in AIF or mutual fund, you have to cut a check and give the investment, or you do RTGS. In PMS, either you can take a check or you can take over the stock portfolio also. SEBI says it has to be 50 lakh at least. You can, on a safer side, when you take stock portfolio, because market might move up and down, take 50-60 lakh of stock portfolio. And that works in the best interest of client also, where he has a professional or she has a professional management of stocks. At the same time, the stocks belongs to them. Tomorrow down the line, you don't like my investing style, you want to move out, you can take back those stocks, which are part of right now your portfolio in my PMS. And if everything goes fine, you can keep adding, some investment amount or stocks to your portfolio. So this works really beautifully. There is no element of any capital gain which comes, because you are just transferring from one demat account of yours to another demat account of yours, for which the PO is my company. And we take care of all the things, all the reportings for our clients, and everything is well taken care in terms of the transition of stocks. And then you get professional management. Look, Kshitiz, it's not an OTC product when it comes to investment. If you have a full-time, let's say, if you have full-time work for you that you want to invest money, and you have research with you, you have data point with you, you are attending calls, then it's good. Otherwise, what happened normally, I've seen that many clients, they buy stocks on their conviction, then they buy stocks on somebody's other's ideas. And normally portfolios are 60, 70 stocks, and it never works in the favor in terms of generating returns or alpha for them. So I think that works really well for client, and it's actually a very good way through which you can have the stock portfolio professionally managed by a professional.
No, absolutely. In fact, it's a new information for, I'm sure, a lot of our viewers and the readers, for them, because if in case, and the minimum requirement is in fact 50 lakhs, you said, right? So
Yes, it's 50 lakh. But
50 lakhs.
it's a beautiful thing wherein, let's say you say I have a stock portfolio of 30 lakh. You
Yes,
can
yes,
give a stock
absolutely.
lakh and you can give a check of 20 lakh.
20 lakhs.
So it can be a combination also.
Yeah,
So
yeah,
not required to have some many times we get a combination of check and
absolutely,
you know
absolutely. And
stocks
then
also.
do you tweak that portfolio as well to your methodology, or the portfolio stay as it
Yes.
is?
Yes, so there are some stocks which might not be a part of my existing, universe,
Model
but they are good
portfolio.
companies. They are
Uh,
good companies. We just tell those clients that just hold those stocks, don't give it to
okay,
me,
okay,
because there are good businesses. Like take for example, Pidilite is right now not a part of my universe.
right.
I will tell the client it's a good business. Please hold it. Don't give it to me. So that to that level, we research and we engage with our client that if there is a good business but not a part of my universe for whatever reason, I tell that client that please hold on with this stock. You can
Okay.
transfer the remaining stocks, and remaining stocks. Normally, what happens is that if I have a loss in some stock as an investor, it becomes very difficult for me to book it. But
Yes.
when I will take on the stocks and I see that there is a value in what I'm buying vis-a-vis
Right.
what he has right now,
Hmm,
I will
hmm.
just sell it, realign my portfolio as per my model portfolio.
Okay, okay. No, no, interesting. And I'm sure our viewers will take note of that. Apart from that, now we're talking about investors who have invested in stocks, but what should, or why should, or you could say, who should actually switch to the PMS category where the minimum investment amount is, let's say, 50 lakh. Usually investors diversify their holdings across mutual funds. So, you have an attractive product for investors who have stock portfolio. Now, what about mutual funds? For investors who have invested their capital in mutual funds, or how PMS actually gives them the edge if they want to shift?
So you can't have a better and beautiful platform like mutual fund, irrespective of we have a PMS license. But I being very vocal about it, it's one of the best platform available for investors, varying from 5,000 investment or 500 crore investment. It's a
Hmm,
beautiful platform available. But my sense is that, or like whatever knowledge we have gained over a period of time, that
hmm.
when you buy a PMS, you don't buy one stock. You buy a diversified portfolio of
Hmm,
25,
hmm.
30, depending on a portfolio manager. Like we have close to
Yes.
about 30 stocks. So anybody who has a portfolio of close to about 2 CR,
Hmm.
he can have one PMS with him, and then remaining 1.5 CR, he can have 4, 5 mutual fund with him. That's how it works. So it is, look, Kshitiz, we used to have 4.5 crore demat accounts. Right now we have 11 crore. This is pre-COVID,
Yes.
post.
Post-COVID, yes,
Okay.
things have
And
changed.
at the same time, there are 7 crore unique demat accounts.
Right.
So the love for direct stock holding will increase only from here onwards.
Hmm,
So
hmm.
one is, again, I said that you have that research capability within you. You do it yourself. Otherwise, give it to a professional. And when you give it to a professional, then you should look at anyone who's having 2 crore plus or around 2 crore portfolio. One PMS you can add to your portfolio,
Yes.
because you are not just risking that 50 lakh by buying one stock. It's a
Hmm,
diversified portfolio of 25, 30 stocks. And any portfolio manager, not only us, will try to do from his or her side right job only, because everybody gains that type of respect in the market by generating return for clients only. So I have worked in this industry. I have not seen that. And there are times, there are years when X guy will not perform, Y guy will not perform, but that will happen across portfolios, across fund managers. This will happen. But yes, anybody with 2 crore plus corpus can
yes.
look at adding one PMS to their portfolio. It's a very open-ended,
Hmm,
most PMS offering are very open-ended. And you can actually customize your portfolio to your need. Let's say
yeah.
you're working for, let's say, X company or Y company. Let's say
Hmm,
you're working for ET, you can't buy ET stock in your portfolio
hmm,
because you
hmm.
already have ESOPs. You can
Right.
customize them. And if I have a 18 in my portfolio, you can request that you can't buy that. So that can be blocked
Hmm, hmm.
at your portfolio level. So
Yeah.
that customization has happened. You'll be surprised that initially PMS used to have 50, 60, 70 signatures. Now with only one power of attorney paper, you can onboard client digitally. So we are onboarding client digitally also.
Okay.
With
Okay.
ICICI Bank and one of the lead partners, we are
Right.
doing that digitally also. So
Okay.
I'm saying the industry is moving in the right direction. I
Hmm.
see that this will grow from here.
Right. Now, you're talking about the industry. My next question is around that only. So, where do you see the PMS industry headed in FY24? Any opportunities or threats you see for the industry?
So I see that, as I said, this love for direct holdings of stocks will grow only,
Yes.
and I think the industry should grow at 35%.
Hmm.
Level. It will grow from there these levels, and as you see, per capita GDP in India will increase. The amount of money which will come to investments will also increase. So
True.
we are here at 3.2, or 3.3 trillion of GDP right now. And current savings are little low because the cult of spending little more has increased after wave two. But
Hmm.
I'm saying, let's say 15-16% savings also, you'll have a lot of money coming in the markets. And organized investments as a trend is increasing.
Hmm.
So I see that the scope for PMS as an offering will increase and grow multifold. The scope for a professional advice on the existing portfolio will also grow multifold. So if the market size is equal to the GDP, which is 3 lakh crore almost,
Right.
or sorry, 3 lakh
Hmm.
$3 trillion, let's say the market cap also of capital markets, then you see 9-10% is a huge opportunity which is unprofessionally managed. So I my sense is mutual fund is at 40-42 lakh crore, and
Hmm. Hmm.
PMS AF basket is at almost 9 lakh crore. This both will grow. But yes, after this new news about AF, I think PMS will grow much faster than AF. AF will grow on the other asset class size, where you
Correct.
have real estate, private equity, or let's say unlisted stocks, and some offerings internationally. That will
Hmm.
grow for
Hmm.
sure, because you have a gift city, one big opportunity for AFs also, where you
True.
can
True.
get from outside. But yes, PMS can grow really fast. Threat is in equity. So the threat is only one. If you're not participating in equity, that's the
Yeah.
biggest.
That's the biggest thing.
So don't think about the 20% or 30% downside from here, whether
Hmm.
because of Ukraine, Russia, or whether it's a global recession, whether because of IT companies not doing well. I'm just throwing a news, which is
Absolutely.
everybody's talking about negative news, but I'm saying that what is the maximum downside we have seen in 2008, and every
Hmm.
2-3 years something happens. We have seen in 2013, we have seen in 15, 16, 18 when long term came, then 2020 when COVID came. So, but the upside is from here onwards. Sensex started from 100, it is close to about 60,000 now.
6,000.
So I'm saying that return over a period of last, let's say it started
Hmm.
in 79, let's say in last 43, 44 years is 12.5, 13% compounding.
Hmm.
So nothing doing, you put in the money in index only, it would have grown by that amount. Not, except for the FD rates in till 90s used to be 12-13%. I remember. After
Yes.
that, these have not prevailed.
Hmm.
And
Hmm.
then till 2018, this all money was tax free. Long
Hmm.
term capital gain in 2018. So biggest risk is not participating. Another biggest risk is people who are thinking that it's a money making machine. It's a PMS portfolio, or let's say any other equity platform.
Hmm.
It's not a money making machine. Because you need to understand, when you're participating or investing in equity, there's an underlying business which is working day in and day night with various
Hmm.
factories, services, and they are generating 15, 18, 20% of earning growth number. Then how you can expect you can grow at 30, 40% in your portfolio, or
Hmm.
100% in your portfolio? You have to give some time to your investments, and with time you will see that compounding works really well. The more time you will give, let's say 15% you will compound at, in 5 years it will almost become double, in 10 years it will become 4 times, but in 15 years it will become 8 times. So
Right.
if time is on your side, there is no risk. If time is not on your side and you're investing into equity, it's a risky bet then.
Well, interesting thoughts there, Kshitiz, and I'm sure our viewers will also resonate with the same. And thank you so much for your time there. And that's all for now. But do stay logged on to etmarkets.com for more on news, business, and economy. Again, thank you so much for your time, Kshitiz.